Good morning, everybody. Welcome. We'll get started in a couple minutes here. Hope everybody's having a great morning. Good morning. All right, good morning. Good morning, Will. All right, let's go ahead and jump right into it. I got a lot of content to cover today, so some bonus content that I posted this morning on X and YouTube, so make sure you check those out. One was from our SPX game plan this morning. Some commentary about our drunken sailor range. I've been getting some questions about what DS means, what drunken sailor range means. So I posted some commentary this morning, as well as some commentary from one of our members in our Discord that completed their pre-market prep this morning, their own game plan. And so that's basically what we do here at Game Edge. So we'll go ahead and jump right into that. So this is Michael coming to you from GameEdge.us. On Wednesday, January 14th, was our pre-market prep session. And as always, we'll cover our three pillars: sentiment, structure, and trend, and some individual equities at the end. Like and subscribe on X and YouTube if I didn't say that already, and share our content. You'll be notified when we go live with our content. So let's go ahead and jump right into it. Jumping right into our market trend model. Again, that's our core of staying on the right side of the market. It's based on the tick index. Bolded white line is our intraday instantaneous CT. As you can see, pretty clearly, it started to flatten yesterday and actually turned to a more descending slope. Still above the colored ribbon. This is our longer look back period and how we position longer term money. So our mechanical portfolios are still turned on. We'll still be putting capital to work on P2P, P-Trans, PGX portfolio, as well as our wheel strategy. I posted yesterday, I think, some trades we closed in our P2P, and then our win rate year to date for P2P. So doing good there. But again, when you start seeing this start to sideways consolidate, you start to be a little bit more cautionary, not necessarily start to look for shorts in the overall market. But if you had a significant capital at risk on the move up and you caught the move to the upside, then you start scaling out some of your profit, which is what we were doing yesterday with our intraday MTM also, which I'll show here. So this is our market trend model from our trading view. We released this a few weeks ago. Again, got great feedback on it. This is our 1 minute chart here from TradingView with our SPX, as well as our overlaid scripts, and as well as our transition areas and ranges from our pre-market prep yesterday. So you can see how this played out. We really started seeing a weakening market trend model right at the open yesterday. We started crossing below this ribbon, and then our overall moving averages and railroad tracks actually started moving to the downside. And when they start crossing to the downside, even if the colored ribbon starts moving back to the upside, as you can see here, the resultant price was not corresponding with what we're seeing in the market trend model moving to the upside, even though there was a little bit of buying. We couldn't get back above the P-Trans level, so we're anticipating more weakness. Then we started going sideways, and then obviously bottom out towards that 69.40 area, which was close to our expected range. And then we dropped through the bottom of DS and then obviously recovered towards the end of the day. When you start seeing the market trend model weaken into the morning, even though price is moving up, again, this is telling you that most market participants are selling. And then we start having triggers of where these railroad tracks are crossing to the downside. So we start getting a little bit more cautionary, not necessarily bearish, but just a little bit more cautionary on the long side. And then you see what happened. We really couldn't push through the transition area while the market trend model was going to the downside. So extreme divergence. And also our vol-M command was indicating that market participants were speculating to the downside, even while spot price was moving up, and then result in move back to the downside for a failure for that move up. So again, come join us in Discord. All of our tools are in there, as well as the code for the market trend model for TradingView. And then we have one for Thinkorswim also. So we can do that. You can load that also. So, all right, let's go ahead and move on to the SPX options complex, largest, most notional value. This is the combined SPX. We'll separate the SPXA from the SPXP here in just a minute. But we've been getting some questions about having the SPX combined. So we are going to show this. Obviously, all expiries turned on, call dominated. So the first thing you should do if you're using our web app is if you click a ticker is find the transition area and then look to see if spot price is above or below transition and where that transition area is. Obviously first call dominated, but then transition area, you'll notice that the GEX transition is the 6960 to 6945. That's the gray box. And then the blue box or cyan box is your DEX transition, 6965 to 6945. So staying above these two levels would put you in a more favorable call dominated positive structure, positive gamma structure for move up towards 7,000. Below the transition areas, you should be a little bit more bearish and look for weakness for a move down towards 6,900. So right now the implied open is below this transition area on the SPX with all expiries turned on. And we'll talk about the other transition areas once we separate the SPXA from the SPXP. So these are just good if-then scenarios, very quick, don't have to really do extensive structure analysis. Just look where the transition areas are and where spot price is. So transition areas above, you're a little bit more bullish, below you're bearish. And then within the overall transition areas, it can be extremely choppy. All right, moving on the SPXA. Again, these are our cruise ships. These are our larger institutional positioning money heading into the monthly OPEX. We are call dominated, but you see the transition expands pretty significantly. So this is really uncertainty with price action. You'll notice the DEX transition here at 6,900. So above that, we'd be bullish. Below that, we'd be bearish. And within this overall GEX transition, it can be some choppy price action. You'll notice 6,960. Is where we closed at, where we closed at yesterday, but we're going to open below that somewhere around 6930 to 6940. So again, that's a little bit more bearish. If we're above these areas and transition areas, we'd look for 7,000 to the upside. And then we'll see how this monthly positioning is after this Friday into February and March. And we'll talk about that on the Delta balance here with the SPXA. All right, moving on the SPXA, this is the Delta balance. So quick orientation. This is how market participants are positioned above and below spot price. So your green dotted line is your right-hand plane. That's out of the money call speculation and in the money puts above spot price. So above zero, that would be more call dominated. Below zero, that'd be a little bit more put dominated. So you notice the green right-hand plane is actually below zero. So out of the money speculation continues to drop. As we've discussed, the structure continue to weaken with out of the money speculation. The red is your left-hand plane. That's below spot price. That's your in the money calls, out of the money puts. You'll notice that it is above zero and up towards one, but we're starting to see a negative slope now in the SPXA and dragging the Delta balance down. So further expiries on out in time. You'll notice February, Delta balance is at one. That's just from the in the money calls below us, but our out of the money speculation continues to drop, even though we're above zero. But we see it drop really into March and then start to recover back up. So we could see some weakness after this monthly OPEX into the February OPEX and then post-February, and then we see a recovery March into April. Again, this is taken with a grain of salt. A lot of things can change, but right now we're seeing weakening out of the money call structure, so that's why we're not seeing advancing. We tested 7,000, but now we're seeing a pullback into the monthly OPEX, and then you will notice that on the SPXP when we get to that also. All right, moving on the SPXP, call dominated, upper quartiles is picked. This is an interactive bar in our web app. So you can choose the highest weighted OIs, 73% of total OIs selected here. So again, call dominated. So then we go to the transition areas. Are we above or below the transition areas? Bullish above, bearish below. 6945 to 6950, confluence of GEX and DEX transition at 6960. Again, we've seen these transition areas stay pretty stagnant, a really confluence between the SPXA and the SPXP. So above, we'd be looking for 7,000. You see obviously significant net delta, gamma and charm overhead. That's why we rejected at that 7,000 yesterday. If we get above 7,000, then obviously we have the opportunity to price appreciate up towards 70.50. You'll notice our proprietary levels of PGEX and COTMC are also stacked at those. So it's going to be difficult to get over those, obviously, into the monthly OPEX. Below transition, we'd look for a pullback towards 69.20.25. You kind of see that double strike there. And then 6,900 to the downside. Again, we would anticipate stabilization into the 6,900 level due to the net delta, charm, and the positive gamma effects here. Again, below 6,900, not necessarily the wheels fall off, but we do get significantly more bearish for a move down towards 68.50. So we'll be watching that intently with the price action heading into the monthly OPEX. All right, SPXP GEX ratio. Again, this is like a put call ratio, but we add a gamma component. So this is weighted more towards short dated call gamma versus short dated put gamma. I forced spot price at 69.37. So you'll notice the GEX ratio continues to drop as SPX was rising and then starting to pull back yesterday. I talked about this pre-market. that we were actually flat. So really the out of the money call speculation was not necessarily ramping up as SPX was moving to the upside. So we're seeing a divergence there. And I was slightly cautionary heading into yesterday that we were most likely not going to go above 7,000. And obviously we rejected 7,000 and pulled back pretty violently yesterday. And then now we're seeing the resultant drop in the GEX ratio. So this is indicating that the call speculation to the upside is continuing to degrade. Out of the money put speculations coming in. Market participants are at least hedging to the downside and dropping below 1. So again, this is a little bit more bearish. And we'll continue to watch this where spot price is at, as this is spot price sensitive. All right, moving on, the SPXP delta balance. Again, this is the same left-hand plane, right-hand plane, as well as the delta balance. Again, you'll notice that we're continuing to see the delta balance drop now below 0 into -1. The right-hand plane, which is that out of the money call speculation, I think we're beating a dead horse here, but I want everybody to understand this. When you do not have out of the money call speculation and it's getting overran by in the money puts, you are not going to have spot price appreciation. That's exactly what we saw yesterday heading into the open at 7,000, rejected at 7,000, and then resultant is we're continuing to see pullback in the overall SPX. Now, this can turn back to the upside. We'd see the green line, as you see here, for expiry to the 15th into the 16th. It does rebound, but we get barely above 0. So we're seeing some speculation towards the end of the week with out of the money speculation. So we may see a pullback here and Wednesday into Thursday, and then we may see an increase or a rebound into Friday. You'll notice that the delta balance rebounds on Thursday into Friday with the right-hand plane starting to increase. And then the left-hand plane continues to drop. So this is your in-the-money calls dropping, and this is your out-of-the-money puts being hedged into Friday. So again, make sure we're watching these as we go day over day. This gives you a great idea of what the structure is looking like and how the structure is changing. Again, this is spot price sensitive also. So we talked about that yesterday morning, and we'll see how this plays out today. All right, moving on. Thanks, Shah. We'll get to those at the end. Moving on, the SPXP net stack command. This gives us our highest sensitivity levels for today. You'll notice we've added this right-hand plane transition, left-hand plane transition. This is where we transition from out of the money puts to in the money calls, in the money puts to out of the money calls. You'll notice that we are put dominated at this 69.35 this morning. Depending on where we open, it's going to be vitally important whether we transition to in the money calls here below us, which will be supportive, or we still have out of the money puts, and then in the money puts overhead to out of the money calls if we get above 69.55. So if we get above these areas, then and we transition to out of the money call dominated, then that could lead to spot price appreciation. That is right around our transition levels also for 0 DTE as well as full expiry. So that 69.55 to 69.60, 45, 50 band is going to be really important to get above. I already talked about bullish above towards 75 and then 7,000, bearish below towards 25 and 6,900. Very clear cut for today. You also notice the net charm levels, 7,000 to the upside, 6,900 to the downside. You also notice those transition levels there. If we get below 6,900, the wheels do start to fall off the wagon a little bit, and we get a lot more bearish there. You'll see the out of the money calls or out of the money puts go to in the money calls. Obviously, they're at 7,000. We already talked about that, above 7,000. But if we get below 6,900, it'll be significantly more negative. And then Gamma and Vanna. So Vanna slightly higher, but fairly balanced. So even if we see a drop in volatility, and how the money calls go in, not going to probably see that Vanna rally today because we're fairly balanced. Slight edge though, so 7,000 is that strike. You see the out of the money calls become in the money puts, and we get very negative once we get below 69.08, and 6,900. So key areas there. So adding those transition areas, we continue to tweak those with the colors and presentation. But really, this is a great addition to our overall net stack command, understanding where the market structure really does transition from bullish to bearish. All right, let's move on to the SPXP 0DT. Call dominated. So what we look at here systematically is we look at our gamma condition, call dominated. We look at our net GEX 8,000. So fairly call dominated there, depending on where spot price opens though. 69.40 is the bottom of DS. Below that, we'd be bearish for a move down towards 69.25. Below 69.25, we would see some stabilization into 6,900. Already talked about that. Transition area, going to be vitally important to get above 69.55 to 69.60. Above that, we look for 69.75, and then 69.75, we do have a pathway up towards 80, 85, and up towards 7,000. You see the charm really is not significant here. So we have positive net delta, gamma, and then the charm doesn't really start to ramp up until 7,000. So if we get above transition, We see out of the money calls go into the complex via our volume command. Market trend model turns up. Definitely could head up towards 7,000 as long as we get above the top of DS. All right, let's move on to the trading view chart. We'll look at the pre-market already. So we reacted at our DS range at 69.40. I've outlined 69.45 in trends and 0 GEX for full expiry. And then our 0 DT 55 to 60, again, going to be very important to get above. That's 30 points up. So I would look for some stalling and rejection into that overhead area. If we get through these levels, and then 69.60, above that, we'd look for 75. And then above 75, we'd look for 7,000. So we have a concise game plan for today where we could see the rejection levels. And if we get below 25 or 28, we'd be looking for 6,900. Again, if market trend model is weakening, and as well as put speculation to the downside. All right, let's go ahead and jump into individual equities. Thanks for holding on and going through all that. So if anybody has any other individual equities they want to go over, go ahead and throw those in the chat and I'll get to those. Okay, MSTR. So the first thing we do is we'll look for this expiry, call dominated. Where is transition area? Transition area is not well defined. So let's look at the top quartile. Transition is overlapping here. So then we look for PGEX and INGEX. So INGEX is actually higher than PGEX. So the actual structure is flipped. So moving above this 180, 182 is going to be very difficult on MSTR, even though we are call dominated. So, and price appreciation to the upside, speculation is not really present. As you see the PGEX level at 180, you want to see the PGEX level much higher than the INGEX level. All right, moving on to Oxy. Let's look at Oxy. Let's look at the top quartile real quick. This includes that. So transition is 40 to 40.50. Spot price is above transition, and we're above PGEX. COTMC is 45, so that's the highest sensitivity point that I'm looking for. I'd be looking for pausing and stalling, and we're actually above PGEX. So historically, that's an area where we pull back to or see some monetization. So let's look at this Friday's expiry. We see PGEX at 43, spot price is above. And then, so 45 would be the cap on appreciation on Oxy that I'd look for, and really not much above that with speculation into Friday. And then after this, 46. So after this expiry, we actually have speculation to the upside towards 46. So if we do get through this expiry and you're still holding, I would look for 46. All right, Meta. Meta is put dominated. You're below transition for this expiry. So extremely weak structure there on Meta. Nothing really to the upside that I would look for. If we're below 625, I'd look for some stabilization. 625 or below 625, I'd look for a pullback down towards 610 and 600. Let's look at the next expiry. Still put dominated. The structure does advance. You see transition actually advance up, but spot price is well below transition, as well as PGEX and INGEX. So fairly weak on Meta. Really not seeing anything to the upside that looks promising there. And the quartiles put dominated, below transition. I'd look for stabilization into 610 and 600, but really doesn't look like anything that I'd want to be involved in. GLD. Let's see this expiry. Let's do Friday expiry on GLD. Call dominated, above transition. You're above PGEX though, so not looking for a significant appreciation yet, or for the upside on GLD. You're above transition there. 430 into the 21st expiry. Let's look at the 23rd expiry. Drops to 420. Let's do the quartile. So call dominated. You're above PGEX on the quartiles expiries. I don't see GLD heading to the upside significantly. 430 to the upside and probably where, but you can see that there's really not a ton of speculation to the upside, even though you're above transition. So we'll be supportive on pullbacks, but to the upside looks limited for now on GLD. All right, let's get into Baba. Okay, Baba. Baba's had a huge move. I think I saw that. Let's see, 23rd. So spot price 170 for this Friday. We see PGEX at 170. So cap on Baba is probably 180 on an extension, but 170 is PGEX. So I'd anticipate some profit taking into 170. And then 180 moves up for PGEX. So if you get through this expiry, I'd look for 180 to the upside on Baba. SPX June expiry. I don't know if you're asking for A or P, but June expiry, I'm going to go with the A that you're asking for June, just because it's a monthly expiry. So I'll do the June 18th. So call dominated there. You see transitions extremely wide, 7,000 to the upside, 7,100, 7,150. I mean, we have speculation to the upside for the SPXA. I'm not saying we don't. It's just short term, we're seeing the structure weaken a little bit. So yeah, hopefully that helps. All right. We don't do NDX, so you can look at QQQ, but we don't do NDX just because it doesn't have OI. IWM, let's do the top quartiles on IWM. Call dominated, above transition, 265 to the upside on IWM looks good. PGX is that level, so I'd look for IWM to continue to be supportive and move to the upside on IWM. CRCL. Let's do the quartile. The easiest is a quartile because that's the highest OI. Call dominated, above or right at the top of transition. 85 is PGX right now. So I would anticipate some stalling into 85, 90, 95, and you see COTMC all the way up there. So CRCL has a runway to the upside. It's just 85. Let's see what the structure is for the 23rd. So 90 moves the structure. So the structure continues to advance. Transition widens a little bit, but CRCL has upside. Looks good on any pullback. PLTR. Prison Mike. Discord, yes. It is, yes, there is an app for Discord. And the platform, our web app is not mobile on a phone. It is iPad compatible for that. Hopefully that answers that question. Just because you need a little bit larger screen for the web app. So PLTR, call dominated, looks good. 182.50 is PGX, 175, top of transition, next expiry, 195. PLTR looks good. Need to get through transition though, and then 195 on next expiry. So that I would look for upside on PLTR. Obviously, the market has to cooperate too, right? 75% of stocks follow the overall market. SLV, let's do quartiles. Call dominated, above transition. You're way above PGX though. So I would look for some stalling and pull back to 80 on that. Let's look at the 16th, which is monthly. 85 to the upsides, PGX. After that, let's do the 23rd, and then it drops to 80. So 85 to the upside, and then I would look for some pullback to 80 on SLV. Looks good. Coin, and then NVIDIA. Okay. Coin, quartile, call dominated, top of transition, 260, 250 to the upside. Would speculation be where I look for some stalling, 260. 260, 250. Let's look for 23rd. 260 structure doesn't really advance much. Let's look for the end of the month here. 260. So 260 to the upside on coin is where I'd look for some stalling, most likely, unless the structure continues to advance. NVIDIA, call dominated on the quartiles. Top of transition, 190 to the upside still looks good. Pullbacks look good. Everything looks good on NVIDIA. INTC. All right, last one here. INTC quartiles, 50 to the upside, call dominated, above transition, pullbacks look good. Speculation, I mean, we do have speculation, but PGX is at highest sensitivity area. So 50, let's look at next Friday. 50, structure doesn't really advance. Let's look at the end of the month. 50 to the upside is where I'd look for that profit-taking area installing. So, all right. Okay. Tons of content covered. Thanks, everybody. Join us at GameEdge.us. Go to the newsletter, put in your email. Beyond the bell, you'll be delivered over the weekend. Again, check out our Game Edge Fast Pass. Free courses here. Check that out. And then our blog. And then as always, come join us in the Discord. Free 14-day trial. All the tools turned on. Our community continues to expand with traders of all backgrounds and all experience levels. And we're here to educate. Our Game Edge team is in the trenches trading with you every day. And we want to help you use the tools and get up to speed as quickly as possible. So quick run back on TradingView here. We're consolidating below the drunken sailor range. That's going to be key areas and transition key areas for today. So thanks everybody for joining us. Love the community. Again, like and subscribe, share our content, repost. That helps our algos get the content out to other people and expand our community. And we are a member-driven community. All of our resources go back into developing the tools, and we take suggestions from the community, and we put them into action with our developers. So anyway, manage risk as always, and everybody have a great day. We'll see you later.